CPI is happening tomorrow, and we've got a really interesting one on our hands. CPI deals with the inflation rate, which everyone should be paying attention to because it affects you in more ways than you may realize. Inflation is the general increase in the price of goods and services, and as long as you haven't been living under a rock for the past few years, I'm sure you've noticed the increase in price for lots of everyday items. Now, we've mentioned this a few times on the channel already, but inflation spiked in June of 2022 at just over 9%, but has dropped somewhat significantly over the past few months and currently sits at 6%. Taking a look at the economic news tab here in the Edge Finder, I can see that tomorrow's forecast for the new inflation rate is 5.2%. That's a significant drop. If we move over into the inflation data tab and focus on the US dollar only, we can hover over each individual month and see how much it has fallen month to month. The biggest drop previously was from November to December, and it was nearly 0.7%. This month, however, is forecasted at 0.8%. That's the biggest drop we've seen since March to April of 2020. We have two other events of significance happening tomorrow as well. Going back to the economic news tab, we can see here that the Fed's FOMC meeting minutes will be released tomorrow, as well as the new Canadian interest rate decision. We're going to touch more on Canada's interest rates a little later, but first, the FOMC meeting minutes that are happening tomorrow are significant. Each month, FOMC happens where the Fed releases the new interest rate decision, and the FOMC meeting minutes is a report that outlines what exactly led to that decision, as well as gives indicators to what may happen in future events. The Fed Tracker feature also gives us some insight into the Fed's plans for the future. First, taking a look at the inflation rate forecast, we can see that by quarter 2 of 2023, we can see that the inflation rate forecast projects that the inflation rate will be at 4.4% by the end of quarter 2, 2023. That's just another 0.8% drop if inflation does in fact drop to 5.2% tomorrow. The interest rate forecast shows that interest rates will most likely remain around 5% until seeing a 25 basis point raise sometime in quarter 3 of 2023. Down here, we can also see previous data as well as other forecasted data for the interest rate and inflation rate decisions. And over here on the right, we have potential impacts for gold, the S&P 500, and the dollar based on different metrics that change that we track here throughout the Edge Finder. Those metrics include US GDP, US inflation, the unemployment rate, US interest rates, and the money supply. The Fed has a long-term inflation goal of getting it down to 2%, and the inflation rate forecast here in the Edge Finder believes that by the end of quarter 1 of 2024, the inflation rate will be around 3%. So still a little bit off of the Fed's long-term goal of 2%. The meeting minutes will give us a better idea whether or not the Fed still plans on raising rates and potentially when we may see rate cuts. Let's go back to the CPI report for a second. Anna Wong, an analyst for Bloomberg Economics, had this to say about tomorrow's report. Quote, "The March CPI report will offer glimmers of good news on disinflation. Plunging natural gas prices in California, aided by a state government credit, helped, but the good news is likely transitory. Oil prices are rising again after OPEC Plus announced production cuts. If that results in persistently rising gasoline prices, it could offset any disinflation gains in the next few months." End quote. The Fed's goal for long-term inflation is 2%, and there seems to be hope that this report could be another step in the right direction towards hitting that goal and another step towards potentially seeing rate cuts happening soon. Let's talk about Canada quickly. Looking at the inflation data tab once more, it's clear to see how much inflation has risen in Canada over the past 3 years, but also how much it has come down. Canada and the US are in very similar positions at the moment. Their long-term inflation goal is 3%. Charalampos Pizarros, a writer for XM.com, wrote this about the upcoming interest rate decision in Canada. Quote, at their last meeting, Canadian policymakers decided to keep interest rates unchanged, becoming the first major central bank to hit the pause button in a tightening crusade. Although in its statement, the Bank of Canada reiterated it remains prepared to increase rates further if needed. It also said that the latest data remains in line with the bank's expectations that CPI inflation will come down to around 3% in the middle of the year, end quote. Canada is forecasted to keep interest rates unchanged at 4.5%, but could they cut rates soon? US and Canadian citizens are watching out for potential rate cuts happening this year. Let's finish up by taking a look at the watch list before tomorrow. Here I see plenty of examples of US dollar and Canadian dollar crosses both in the buy and the sell bias categories. I can also see a couple US indices. In fact, all three US indices that we track here, the NASDAQ 100, S&P 500, and US 30, all listed at really soft buys at the moment. Now, I want to remind you that this is not financial advice, and I do not recommend that you trade before a news event. I just want to show you what the Edge Finder has to say about these assets before the CPI event tomorrow. Did you know that you can get 40% off the Edge Finder right now? Our advanced market scanning software, the Edge Finder, was first released 1 year ago in April. So to celebrate, we're doing an anniversary sale. Over the past 12 months, we've helped traders all over the world sharpen their skills and find better trades using the market scanner. This is the best time ever to get the Edge Finder for yourself at this massive 40% discount. Day trader, Edge Finder. Swing trader, Edge Finder. Fundamental or a technical trader, it all comes together in the Edge Finder. So don't wait, because this sale won't last forever. Be sure to take advantage of this 40% off discount at checkout when you use promo code A1YT. Happy trading, everyone. We could also take a look at the Smart Money Tracker really quickly to get an idea of what institutional traders are going long and short on ahead of CPI tomorrow. So right now, the Canadian dollar is really bearish for institutional traders. Currently 81.89% short from institutional traders. The S&P 500 and US 30 and even the NASDAQ 100 as well are all favored on the bearish side as well from institutional traders, whereas the US dollar is favored on the bullish side. And let's see, where is gold? Gold is right here as well. Gold is just a little bit ahead of the US dollar in terms of bullishness. So institutional traders currently favored long on the US dollar and gold, but favored short on US indices as well as the Canadian dollar. All of this, again, heading into CPI report, FOMC meeting minutes, and Canadian interest rates. It's sure to be a really crazy news day tomorrow. Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.